Hello everyone. Today we are discussing a topic that is funds. When you think about funds, what comes to your mind? Funds means it is money, or there can be other things which can comes to your mind, such as think that you have a particular kind of a asset, and because of that asset think that you are getting certain kind of revenue, that is also known as funds. Okay. Funds can be a pool of money which is collected from different investors. Now, to have a more discussion on funds, let us discuss what is the meaning of funds. If you discuss in a very simple manner, funds means it is sum of money which you have saved for particular purpose. And the purpose can be anything to meet your day-to-day expenses or for the good future you have saved money. That also can be one of the purpose of having the money, or purpose can be anything just to meet your emergency needs or to have a very good life. You may save a sum of money which is known as funds. Now let us discuss the meaning of funds. The meaning of funds is that funds refers to a pool of money that is collected from different investors for the common investment objective. When you think about money, no one will think or no one will expect to keep money as it is. Everyone will expect certain kind of returns out of that money. And to get a kind of returns, either you may invest that money in certain investment avenues, and because of that, you may expect certain returns out of it. We can discuss the meaning of funds in other ways. The collected money is managed by professional fund manager who invest it in different financial assets such as stock, bonds, and other securities to achieve the investment objective of fund. Now, we have discussed when we are discussing the meaning of fund, we told that it is a pool of money and we expect certain returns of the fund. And to get returns, we may try to satisfy the investment objective. So, to satisfy investment objective, either we can work individually or we can take the help of professional fund manager. Okay, what this professional fund manager will do? They will try to identify the risk and the returns associated with that money, and they try to invest in certain investment avenues so that the expected returns will be given to the people who are the owner of those particular funds. When we are discussing the meaning of funds, there can be many objectives, or there can be different objectives of investing money. When we are investing the money, we expect returns from it either by investing in financial asset or by investing the money in stock, bonds, or any kind of a securities. And uh, when it gives the return, then only we can tell that our funds are working. So when the money is invested and returns are earned from it, then only the fund will become more advantageous. Okay. Funds are used by many individuals, or it can be used by the businessmen, or to do a business or to undertake certain kind of activities. The funds are required. Even the government authorities, to provide very good government facilities, they also use the funds. So, when individuals are using their funds, it may satisfy their unexpected expenditure, or It may help them to meet their emergency necessities, or at the same time, the funds what they have saved, what they have invested, that may earn returns, which will also give them a very good life. Individuals or institutional investor, they also try to invest the money, and have they will also have a goal of making profit. So there are different types of funds in which you can invest money. Before we discuss the different types of funds, let us discuss what are the features of funds. Here are some of the features related to the funds. We'll discuss each feature one by one. The first feature says about liquidity. What do you mean by liquidity? Liquidity means the capacity of converting the money into usable form. Whatever funds you have invested as an investor, that allows you to sell your investment and get returns out of it. Or at the same time, as an investor, you can buy and sell your stocks, shares, or bonds at any time and convert it into cash. And that is known as liquidity. So, at any time, it can be converted into liquid form, which is known as liquidity. And because of this feature of liquidity, you can use your money at any time, and also you can meet your changing needs. Let us move to the second feature, diversification. What do you mean by diversification? When we are investing the funds in different avenues, we need not invest all the money in one particular investment. Funds provides the investor, or funds will give you a kind of diversification benefit through which you can avoid the risk. So, diversification says that you can invest your money in different types of assets. Why? There is an advantage of diversification that reduces the risk. So, by diversification, you can reduce the risk of losses due to market changes, and that will also gives you benefit of reducing your risk. We'll move to the third feature, professional management. As an individual, you can invest money in different avenues, but at the same time, I've already told you can take the help of professional fund manager. They are the expertise people and who has a very vast knowledge about financial market. So, with the help of professional fund managers, you can get different updates related to investment decisions, and according to their guidance, you can invest the money. At the same time, the professional fund manager take investment decisions on behalf of the investors, and that also helps them to get more returns from their funds. Next feature says about regulation. Funds are there is a regulatory body which tries to control all the operations of funds. Now, funds are regulated by Security Exchange Board of India, and that ensures and it also protects the interest of the investor. There will be different relevant legal and regulatory requirement which need to be complied by the which need to be followed, and that regulation is followed, and that will be managed by Security Exchange Board of India. The last feature says about transparency. Funds provide the regular updates on the performance of the portfolio. the market will not remain same for a longer period of time. It keeps on changing, and it also provides the regular updates related to that. So depending upon the regular updates, you can take the right decision. So it is transparent, where it helps the investor by giving the information at right time, and it makes the investor informed about the changes in the market, where the investors can take investment decisions. Okay, these are the few features of funds which says about liquidity, diversification, professional management, regulation, and transparency of funds. Moving further, we'll be discussing about certain types of funds in brief. I told, when you're investing funds, you can invest funds in different avenues, and those avenues will give you the returns. Here are some of the types of funds which we are going to discuss now. The first type what we are having is equity funds. What do you mean by equity funds? These are the funds where you can invest your money in stocks, or you can invest in equities of companies. So equity funds will help you to get returns of it. But it is further classified as large cap, mid cap, and small cap. And depending upon the investor's interest, whether he is a risk seeker or whether he is not ready to take much risk, or he is able to take moderate risk, or he expect only returns and he wants to take only zero risk, so depending upon that, funds can be and invested in equities of companies and get returns out of it. The next type what we are discussing is debt fund. Debt funds are those funds where the investor can expect fixed income from those securities. So, when we are discussing about debt funds, there are different types of debt funds. The government securities, bonds, or other debt instruments are certain kinds of debt funds. It promises you that it pays you fixed income on your securities, fixed income on the fund what you're invested. So, debt funds also can be further classified as liquid or ultra short term or short term debt funds, long term debt funds, and there are many more classifications even related to debt funds. Our next topic, or our next type of discussion, is hybrid funds. What do you mean by hybrid funds? These are the funds invest in combination of equity and debt. Just now we discussed what is equity funds and what is debt. If you're investing your money in equities as well as in debt securities, then it is known as hybrid funds. So, the investors who are investing in hybrid funds, they will get a balanced portfolio of stock and bonds. Equities may have certain kind of risk, at the same time debt will promise the fixed income from the securities. So when it is a combination of equity and debt, you can tell that it is a balanced portfolio. And there are different types even related to hybrid funds. uh, we can classify it as conservative funds, balanced hybrid funds, or aggressive funds, and many more. Moving further, next aspect we have, that is mutual funds. Mutual funds is one of the best avenue what we can discuss, and even our further videos will tell you or further videos will give you detailed information about mutual funds. Mutual funds, we can call it as a thali, where there will be different, a thali will include different types of dishes, different types of varieties of food. Similarly, mutual funds will have different types of uh, investment avenues. You will have equities also, if you will have debt funds also, and in addition to that, there will be different types of investment avenues where you can get money out of it. A investment manager will make the plan for his clients, and he will invest the money in different avenues on behalf of the investor, on behalf of the investor, and he makes sure that they get good returns out of it. We'll be having a detailed discussion on mutual funds in the coming videos. Moving further, the next type of fund is index funds. These are a type of funds where the performance of those funds can be tracked with the help of index. What kind of an index? Now, if we check the the stock market, we have Nifty 50, which gives you the index related to NSE, and we have BSE index, which is known as Sensex. And by investing money in the same securities, which is uh, securities and underlying index, is known as index funds. Next, we have international funds. What do you mean by international funds? These are the funds invested in security listed on international stock exchange. If you invest money in or if you invest in those stocks which comes under Nifty 50 or which comes under Sensex, then that is those are the indexes related to NSE and BSE. Think that you are investing in global market, and the money where you are going to invest, or the stock what you're going to purchase from the global market, if they are listed in international stock exchange, then it is known as international funds. The last type what we are discussing is commodity funds. You need not invest money only in stocks, debts, or bonds, and many more. You can also invest your funds in commodities. What kind of a commodities? It can be the investment in gold, or investment in silver, investment in crude oil, or any other kind of physical holding which gives you the return. When you invest money in commodities, depending upon the operations of or the price changes in these commodities, you can get the returns. So, this is known as, if you're investing your money in commodities, then it is known as commodity funds. So, these are the certain things what we wanted to discuss in today's video. So, I hope it gave you a brief information about the funds. So, we'll meet in the next video with a new sort of information. Thank you.